All right, for more on how the markets are moving to start this week of trading, we're joined now by Seth Denson, the co-founder and chief strategist at GDP Advisors. Seth, great to have you on this Monday. Let's start with the U.S. and China deciding to delay their trade talks. They were supposed to happen this weekend. How concerned are you? How concerned should investors be about rising tensions with China?
Well, I mean, listen, I don't know that tensions ever softened between the U.S. and China. So I think that investors have come to realize that high tensions between the United States and China are a part of the story now. And so I'm not overly concerned this morning about the conversation that didn't happen or that it may not happen anytime soon. At the end of the day, the trade deal is now, almost half a year, a little bit more old. China's only held up 23% of their end of the bargain so far as their purchases of the United States goods. And again, I think our market is still strong and doing well. So again, I think that until the election is over, all signals are that the conversations have probably slowed, if not, they're going to be non-existent going forward.
Well, let's talk about the election because it's not that far off. President Trump has always touted himself as being really tough on China, but I know you say that China actually sees Biden as the more formidable partner. How so, and how might that impact things?
Well, I think that certainly China has had their challenges with the Trump administration, and I think that as they look to Biden or at a Biden administration, a Biden-Harris administration, they're certainly thinking, hey, we've got some track record to go off here, right? I mean, they had 8 years of an Obama administration where Biden was very much involved, and so I think the we'll call it lack of predictability of the Trump administration is challenging for China as they start to think through their 100-year plan and execute it. So, there were reports out last week that China is certainly pulling for a Biden administration, and we'll see if that pans out for them. But that's certainly the position I think that they're taking.
How badly are farmers here in the U.S. relying on Chinese purchases just to stay afloat right now?
Well, you got a double whammy, right, with the COVID crisis and the economic crisis where it is. You had a big whammy last week in the weather impact to middle America and farmers. And so I think that China being a huge purchaser of American goods plays a big role here. And again, it was the anchor of that trade deal or a big part of it that the Trump administration was pushing for. And so that hasn't changed. American farmers need China buying American goods, and hopefully that'll happen soon.
The president's also made a point of targeting very specific industries like the tech industry, for example, and specific companies, Huawei. Now he's pointing at potentially banning Alibaba. What would that mean for small businesses here in the U.S., particularly during this pandemic? Many of them have found new customers by using Alibaba.
Well, it could have an impact. And again, this is the challenge you have when you're thinking about the long-term impact of technology and how it's going to play a role in national security. And I think that's the position that the Trump administration has taken. But there is some short-term sacrifice in having to rethink it. And you've got, again, kind of a double kick you while you down for small businesses who've largely had to close because of the pandemic and have found new ways of doing business because of the technological enhancements that are provided by companies like Alibaba. So again, I think this is going to be painful if it goes through, and I'm hopeful that there's a workaround and a way to continue to provide the goods and get the goods and services and the technology support without impacting national security in a way that the Trump administration would be pleased with.
Let's switch gears a little bit and talk about the stimulus plan that is being negotiated, or maybe not even negotiated at this point. The market really seemed to price in that some type of stimulus deal would pass. Where does it leave things now? The fact that lawmakers, they did leave, and now I guess they're coming back because of the Postal Service. But what is the thought from Wall Street when it comes to just politicians at this point?
Well, on Friday, the S&P was within 1 point of an all-time record, and we were no closer to a deal happening then. So I think that the markets have priced in the reality of politics, because politics is the reason we don't have a deal here. It's not because the American people don't want it. It's not because the American people don't need it. It's because both sides are playing against each other from a political perspective. And it's interesting that the House of Representatives will come back to fight on the Postal Service, but they wouldn't come back in session to figure out a stimulus package for the American people who desperately needs it. So again, I think that the markets have realized that politics are playing their usual role, and that the American people are largely going to have to fight through this thing in the hopes that something will come out of Washington. Obviously, the Trump administration is trying to do some things through executive order, but we'll ultimately see. But I think that the markets are where they are, and they realize that politics isn't going anywhere.
One of the things that's really apparent during this pandemic is that Wall Street and the markets are quite different from the economy and what's going on Main Street. And it seemed a little confusing at first when you think about just millions of people unemployed. But in some ways, is Main Street's loss Wall Street's gain? When you think about, if a mom and pop store was to close up, and people still need certain products, they might go to a Walmart or a Target or an Amazon, which are, of course, publicly traded companies.
Yeah, and I think that the proof has been shown out here in that, these small, non-publicly traded organizations who are fighting to make it and to do things have largely suffered, while larger organizations, publicly traded, have found opportunity in that. They found opportunity in consolidation, in mergers and acquisitions, in low cost of capital, and that's why I think that the stock market has done well. And there's the real disconnect, I think, in our economic system. Not that it's wrong, but that's just the way that it oftentimes sadly works, is that the Main Street mom and pop suffers while the Wall Street organizations get bigger and find ways to capitalize on that.
Is there any point where that stops, though, where the economy just gets so bad that it can't support, the valuations from these companies in terms of consumer spending or other areas?
Well, I've long said that I think some of these evaluations, I wonder what's driving them. And I think that is something that certainly as we come out of this, a lot of heads are going to start looking at. But sadly, I don't know that it changes. I think that this is the structure of the U.S.-based economy and sadly the global economy. We continuously seen over the last number of decades consolidation, and as long as capital is inexpensive to get, and larger companies have the ability to consolidate and merge and buy up market share, we're going to continue to see that going forward.
All right, Seth Denson, co-founder and chief strategist at GDP Advisors. Great to get your insight this morning. Thank you.